Hello and welcome to Commodity Champions. I'm Manisha Gupta. We direct the spotlight today on sugar and ethanol sector. The global sugar prices, remember, have been soaring in the past few weeks owing to concerns about shortage in supplies, with sugar prices trading at a 4.5-month highs in New York and a near 12-year highs in London. Last week, the world's largest sugar trader, that's Albion, said it is expecting a 6th straight year of deficit in 2023-24. Here are some of the factors that are adding on to the shortage concerns. India, which is the world's second largest sugar producer, may be considering restricting sugar exports in order to curb the domestic prices amid a below normal monsoon year. The government has directed sugar mills and traders to furnish details of sales between the month of May and August. Domestic sugar stocks are also trading slightly lower because of that in the day. Another reason may be that Thailand also is expecting a lower output. The country's millers estimate production to decline by 18% on a year-on-year basis at 9 million tons. To first address the global sugar prices and production concerns, we have with us Jose Orive. He's Executive Director at International Sugar Organization. Mr. Orive, thank you so much for joining us. And there's just suddenly so much happening within the space, whether it's about sugar or cane or ethanol for that matter. I first of all want to start with the sugar prices itself. What is your sense? Because we've seen prices continue to gain in various geographies.
Well, thank you very much, Manisha. A pleasure to be back with you and discuss the dynamics of sugar and biofuels these days. As you correctly stated, never a dull moment. ISO right now is expecting a much reduced surplus for 22-23 and a deficit for 23-24. That, of course, bodes well for prices. It means that we will continue to have levels above 20 and certainly ranging around 25 cents per dollar in the New York Contract 11.
What is your sense, at International Sugar Organization, when you look at the global demand, supply, and the deficit, as you've been talking about, if you could just lay down those numbers for our viewers?
Okay, we are going to forecast a 0.493 million ton surplus for the 22-23 season. This is down from estimates that were higher before. And for the 23-24 season, we are pegging presently a deficit of 2.118 million tons. This is mainly due to the reduction in Thailand that you correctly pointed out before, the situation in India. We beg to differ with the numbers you put out there. We have a revised total of 7.5 million tons of exports of India for 22-23. Okay. And our forecast for 23-24 ranges around 5.8 million tons. Brazil, they had an extra amount of cane for exports this year because of their late harvest. That's not going to happen in 23-24. And I think you pointed out the situation in Thailand. Our heart goes out to our Thai friends. They are having a tough time with a drought, precisely at a juncture where they were incrementing production capacity in areas in the Northeast. We pray that the weather will stabilize and they will be coming back to business as normal.
Mr. Orive, you talked about the Indian exports, where you have an expectation that we would be looking at a higher number yet again. I mean, when you look at the Indian crop and the various steps that the government really seems to be taking, the latest clearly has been asking mills and wholesalers and traders, everybody associated within the sugar trade, to come out with selling numbers from May to August. How would you look at India, the way we've been going around with sugar, and how would you justify those expectation of export numbers?
Well, please, just to be clear, for this year, we are calculating a 7.5, and for 2024, we think it'll come down to 5.8. Obviously, the timing of the government releasing the authorizations for export is key. And, if that doesn't happen in an agile fashion, then we will have a problem. And I think that right now, the fluidity of Indian exports needs to be improved. I think it's going in the right direction. And obviously, the ethanol program has been a success.
And coming to ethanol then, and yes, we have seen India actually achieve that 10% blending way ahead of time. And with the expectations that 20% now could happen by 2025, we've seen so many statements come out on that. With the kind of investments that we've seen in the space and the current liters of supply, what's your sense and how close or far is India from those targets?
We think India is going in the right direction, and we have every reason to believe that they will meet their target. We have our experts here's analysis, and it looks like you are going into the right direction and that you will meet first at 12 and possibly then a 20% mandate. We applaud the commitment of both the government and the Indian industry, and we think there's also work to be done in joining forces with the corn sector and others that also produce ethanol in order to have a unified supply.
Jose, also, how would you look at the Global Biofuel Alliance? I mean, a lot of countries have applauded that, and we've seen India's sugar sector applaud it as well. I mean, we saw the sugar stocks run up after that news came in. How would you read into that? How long is it going to take that? Because we do understand that much of the ethanol is produced as of now between US and Brazil, with India also making inroads there. Consumption also happens within these three countries.
Yes, I think that right now, the formation of the alliance is the best thing that could happen. I think we are all clear about the Sustainable Development Goals of United Nations. The priority of decarbonization is now at the forefront, and biofuels plays an important role as one of the solutions, the options in the basket for countries to decarbonize and provide cleaner air and a better future for upcoming generations. We have seen the Global Fuel Alliance been followed by an American biofuel alliance that comprises everyone from Canada all the way down to Argentina. We are seeing similar movements throughout Europe, so we think the integration of the biofuels directive is a positive thing.
With the kind of investments that we have seen in this space and with the kind of pricing that we are looking at Indian markets vis-a-vis other international markets, what's your reading on that?
Well, I think investment will follow opportunity. And obviously, the dynamics of pricing need to be congruent with the investment required to pick up capacity. We have, unfortunately, seen some incidents where people think that fabricating, manufacturing ethanol is just like blowing up into the air. And it does, there's no clarity in some cases as to the complexity and the amount of money, the liquidity it requires. We think that if prices are maintained at an acceptable level, and if countries resist the temptation of subsidizing other fuels, that we will be in good shape.
Also, how would you look at the Indian markets? I mean, we've seen various steps being taken in various commodities. So whether it's about perishable commodities like onion and tomatoes, we've also seen that happen for pulses. Edible oil also is dealing with measures taken. And sugar also seems to be looking at that for last 1 year. How worried should Indian government be with the kind of numbers we're working with?
I think the Indian government shouldn't be concerned. I think they are improving on day by day the administration of what is a very complex scenario. I think the integration of positions with ISMA and the industry is a fabulous thing. At ISO, we highly value India because it sings with one voice. I might talk to my friend Sanjit Singla and the government, or Ajija Junjunwala at ISMA, and they sing off the same hymn sheet. They are clear of what it's going to take for India to move forward. Obviously, the dynamics as you evolve forward are going to merit attention. And I don't think anyone in their right mind can, with precision, forecast exactly what's going to happen. So I think first you have to forge trust, you have to generate goodwill, and then you have to evaluate the scenarios in front of you so that you are prepared no matter what contingency arises.
Well, a final question really, Jose, and the markets are concerned on what exports, how much exports, what kind of investments, how much ethanol production. So if you were talking and you are talking to a lot of people in Indian government, what would you advise them when you look at this sector?
Continue to strengthen the sector because it is an example of participatory growth. And for a country like India, it represents opportunity for so many people. In the measure you diversify more into biofuels, the multiplying factor of the opportunities generated is boundless. So I would say to the government, keep it up. Join hands with the sector, work together, and make India rise.
Jose Arif, always a pleasure talking to you. Thank you so much for joining us on CNBC TV18. But joining us also on the show now is the ISMA head. We have with us, joining right now is Aditya Junjunwala. Aditya, hi. You heard what Jose has to say. And clearly there is so much concern right now into the markets. We have seen lesser rains. The government is also mulling perhaps at, curbing exports in some sense as well. Though Jose has a big number to put out there. What's your sense, first of all, onto the export part of it?
Thank you, Manisha. As I told you earlier also, as it stands, ISMA is taken. It's too early to decide on the export numbers.
Sure.
We are still awaiting for the rains to happening. I think September rains are a little better than the earlier ones. Like earlier, we had some drought in August, but September's were better. And I feel, again, October will be better for rains. So let's review the situation, the crop situation in October, and then again we take a call about what is the total crop availability in the country.
Aditya, government's latest notification on stocks, how would you read that one?
I think the government is pretty sure, depending upon there's no stock holding, that nobody is holding the sugar. I think it's just in a lighter note that we feel as industry, and we are all with it, and we have already supported the government giving us the data. So I think the government is just trying to play a little safe and see that nobody is holding the sugar on that stock.
As Jose also said that the prices in the global markets, 25 cents and above is what he's expecting them as. For the Indian markets, the current prices, are they of any concern? Also, how would you look at the Indian prices vis-a-vis the international markets?
So if you see, the international prices are much above the Indian domestic prices. I think the industry, the government is looking after the consumer very well. If you see, the international prices which are approximately $700, and the neighboring countries which are selling the sugar at 80 to 100 rupees a kg. And whereas the price we are selling at 37 to 38 rupees. I think that is the concern that ISMA as industry has always been thinking about the consumer first, and second then ethanol, and thereafter the export. I don't think there is a concern on the sugar prices, but we also need to understand the government has been increasing the FRP, and FRP accounts to about 80% of the cane sugar cost. So we need to understand that there will be increase depending upon the FRP increase and other variables and inflation, of course.
Do we have sufficient stocks right now in the country for the festival months? Because almost everything seems to be working towards the fact that there should be enough availability, affordability with the festivals coming in, with the elections coming in.
I don't foresee there's any problem in the sugar stocks.
Okay.
As of now, we say even after the September end, there will be sufficient stock in the country to tackle with the situation, or maybe for the upcoming festival season.
Aditya, also the ethanol alliance, what does it mean for India? I mean, Jose also was saying that they absolutely applaud this. We perhaps are moving towards climate change, cleaner energies going forward. How does the Indian industry look at this? I mean, we did see markets react quite positive to this.
Yeah, absolutely. I think ISMA has already started it. 2 years back, ISMA was the front runner and was requesting the government, this is the alliance that we need. I think this is a huge step the government has taken it forward. It's not only for us, it's a world, this global alliance will be helping to the world. If you see, for getting a cleaner environment, and we have to have technology transfer. As you rightly said with Jose, that India, Brazil and USA are currently the front runners on this, but I think a lot of other countries are following, and we are all there to support them in this blending program.
Fair point. My final question to Jose also was the same, that if there was something as an ask to the government, what would that be? And that's exactly a question to you as well. So while the sugar sector, the mills, the industry seems to be getting a lot of attention right now, what are the asks that you still have put out in front of the government?
So what we are asking the government for a clear roadmap or a clear policy, as we know that we need to achieve E20 by 2025. So therefore, we need a big investment. So accordingly to our numbers, 20,000 crores needs to be invested to ramp up the capacity to produce and supply that to approximately 1,400 crore liters to fulfill E20. That's one ask that we have requested the government. And second, we request the government to have a clear roadmap on pricing formula, because 80% of our cost is the cane cost. Keeping the cane cost, sugar price, there can be a long-term formula for deriving the ethanol prices that will help industry to put up more plants and build up more capacities.
All right, so some positives and some asks there coming in from the sugar industry as well. Aditya, as always, thank you so much for joining us here at CNBC-TV18 with your sense on the sector there. With that, we are heading into a short break, but we continue the discussion with Gurdev Gill of Agriculture Options Broker at Marex when we return. Welcome back. We continue the conversation on sugar. This is a sector that clearly has been on headlines, the concerns and outlooks for Indian sugar sector. We are now joined by Gurdev Gill of Marex. Dev, hi. You perhaps heard the International Sugar Organization as we were chatting, and he thinks there's a deficit going to be in this year, but he also believes that the prices could continue to stay northwards of 20, even 25 cents. What's your own sense on this?
Yeah, thank you for having me. First of all, Manisha, as always. In terms of our opinion, and again, respectfully listen to both ISMA and ISO, we perceive and sort of agree with some of the narrative from large trading house organizations, which typically have been indicating that we have been in deficit between 3 and 5 years. And this is coming to a culmination and a sort of juncture for global prices, which has led us here. And, going forward on prices, we estimate that they will be elevated still, but ultimately the juncture is rolling on and continuing to draw down stocks around the world, which are already incredibly tight, indicated in very strong domestic markets in various parts of the world, including India and China, or indeed we are now going to take a leg higher in the global prices and really come to a biting point where it comes to prices and a function of the stock and deficit.
So as Marex, what are your own numbers when it comes to prices?
Sure. I mean, so I believe last time I was here, we were talking, the market was around 23. We'd indicated 27. It was pretty much the high. We're now at a cruising altitude between 26 and 27 cents currently. We do respect that there is an important industry roll period right now, curtailing prices somewhat, but ultimately we think there are a few more cents on the price on the upside to come. And on this occasion, what has been particularly interesting is the engagement from consumers. So clearly there is some interest and appetite for consumers to continue buying even at these prices.
With that in mind, I'm still looking for a number there, Dave. Is it going to be 28, 29? Are you going towards that 30 mark? What are the kind of highs that we can expect?
We think 30 cents is possible, and certainly, there are incredibly kind of compelling reasons fundamentally for the price to continue increasing. Notwithstanding, if I may elaborate on some of the challenges we have, South Brazil, monster crop, and where the industry was looking at estimating around 36 million tons, 37 million tons. The weather's been fine, apart from a bit of wet weather. We've had terrific yields, and shipment out of Brazil has been stellar. Records have been broken of late. So we have the juxtaposing Thai crop where we're at 8.3 million tons, Indian crop where we're at 30.4 million tons, and the Brazilian crop, which looks entirely possible to be 39 to 40 million tons. So it's juxtaposing those two things. And again, coming up to a futures expiry, not to get too technical, but beyond October, looking at March expiring on ICE New York futures, there is a huge amount of time between October and March for the price to contort and be moved around, particularly when we have El Nino, which is what we have in play at the moment.
The whole industry seems to be getting divided. Not divided, rather. It's taking a lot of strength from the fact that now there is sugar to make and there's ethanol to make whole year round. But the investments and the kind of returns that we're looking at, how would you segregate that? And how much is that adding in for the sugar prices?
I think our perception, and something just to highlight in some of the differences we have respectfully with some of the other analysts or associations, we see India incredibly tight. So even though there are plenty of people in the industry, a few people in the industry below 30 million tons for India this year, we're not there. However, our perception of stock is incredibly tight. We think 4 to 5 million tons is all that India will end up with. We have a perception that the monsoon, August was the most acute period of time, but going into September, we're still running behind, and you have a risk of an early withdrawal of the monsoon in October. You've mentioned festival demand, you've mentioned Diwali. We think things are incredibly tight, and we certainly don't see any exports for next year. The import element we dismiss in that you have this fantastic ethanol blend mandate, which you're following, but actually allows you a little bit of wiggle room, the tune of max 4 million tons, where you can actually move away from ethanol short term in order to create more sugar, in order to avoid an import scenario, which we don't think is the base case or likely. So that's the Indian part of the equation. In terms of Brazil, obviously, we have a consistent output there. Shipping is fantastic. Some of the challenges with logistics haven't been realized, so that will continue to provide ample interest and supply short term. However, looking beyond the October expiry, again, March is very much the Asian-centric element. And again, if we do see more spec activity and interest, it's going to be on March. It's going to push up the March prices, and that's how we perceive the evolution to take.
So, Dev, if you think that with the mandatory ethanol that India has to make, exports perhaps wouldn't happen, is the international market already factored that in, and how much of a price rise or a deficit do you see then coming in if India absolutely is absent from the market next year?
For the most part, we believe that the market has taken, certainly all this year, a decision that exports won't take place. As Jose from ISO correctly mentioned, in our opinion, there's all about timing. It could come late, but our base case scenario is not such. I think going into 2024, we believe that the market would still be surprised and react somewhat to a categoric no export approach. And just, if I may add, that the very important thing right now is the monsoon and the disappointment, particularly in Maharashtra and Karnataka, is really something that cascades into next year. Typically, when we have a monsoon that disappoints and underperforms, it impacts to some degree this year, but really is something for next year. And that's something that we definitely think is going to be, and our crop tours are continuing to follow that sequence of events, which also would create a great deal of concern, especially in an election year, to be safeguarding the domestic stock situation in India.
Well, absolutely. Have to look at the Indian markets first, and then the ethanol mandate, and then maybe export. And in the meanwhile, we've seen government also take stock of the Indian sugar itself with various stakeholders here. So there's plenty happening when you look at sugar as a sector, whether it's about sugar itself or ethanol. And then, of course, the pricing, which Isma also talked about. Dev, thank you so much, as always, for joining in and taking all of those questions so well. With that, it's a wrap on this edition of Commodity Champions. Thank you so much for watching.